Minting volume actually hit an all-time high in 2024. The highest that it reached in January 2021 was 800 million in a month in terms of minting volume. In November 2024, it hit 1.5 billion. And so there's more that's being minted now than there ever was. 97% of that is happening on Base. This kind of perception that we have around NFTs, right, that it's art and that it's collectibles, you're really seeing that diversify quite a bit in 2024. Some of the top assets are collectibles or game assets, but a lot of them are reward systems, right? Or they could be NFTs used in DeFi activity, or they could be just kind of like a badge or some sort of identity credential that's given out. And so you're really seeing this huge diversification of what it even means to be an NFT.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shen. On Tuesday's episode about crypto under Trump, featuring guests Jake Chervinsky and Mike Seelig, Rain tweeted on X, "Let me tell you about Jake. He's an enlightening, knowledgeable, total nerd, and DeFi Chad fighting for humanity's rights and freedoms in decentralized finance. Hashtag DeFi. Even pure meme heads love him." If you want to hear your comment on the show, go to X or YouTube to post a comment or retweet. This is the December 11th, 2024 episode of Unchained. Polkadot is the original and leading Layer 0 blockchain with over 2,000 plus developers. And the Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem. Join the community at polkadot.network/ecosystem/community. Today's guest is Maria Shen, a general partner on the investment team at Electric Capital. Welcome, Maria.
Thanks. It's great to be here.
Electric Capital's developer report is one that the industry eagerly awaits every year, and it seems that this year there were a lot of big takeaways. What are the top line ones that caught your eye?
So this is the 6th year that we've been doing this, and just having even the privilege of tracing this data for 6 years has been incredible. There are, I guess just as a top level takeaway, there are now 23,613 monthly active open source developers in crypto. I always like to caveat and say that this is a massive undercounting of developers in crypto because we only look at open source developers. So this doesn't include a lot of gaming developers, a lot, Coinbase developers usually are part of this. And so really any company with a private code base isn't part of this. So, but we're looking at 23,613 developers. One of the things I really like to appreciate each time is just how much crypto has grown. And looking back, when Ethereum launched in 2015, we had about 1,000 monthly active developers. And so just that kind of 39% annualized growth is really amazing to take a step back and appreciate. This year, we included a lot of geography data looking at developers around the world. And I think one of the biggest takeaways is that crypto is now global. And crypto is global, and the momentum is really shifting out of North America and out of the United States. So one of the fascinating takeaways is that Asia is now the number one continent for crypto developers. So Asia has the largest developer share. 1 in 3 crypto developers live in Asia. And we can also see which ecosystems are the biggest ecosystems across these big continents. Ethereum is the biggest ecosystem in every single continent. Solana is number 2, and there are different projects that are vying for the number 3 spot. That's been really fascinating to see as well. Another part of it is the growth of India. India is now number 2 in crypto developers, up from number 10 in 2015. The US is still holding on to its lead, but it's been losing developer share every year. So part of that is really just seeing, this shift of developers out of North America, out of the US. They're still quite dominant here, but you see the up and coming growth of developers coming, especially out of Asia. Another big takeaway this year is how many new developers really flocked to the Solana ecosystem. this is the first year since 2016 where any ecosystem was able to beat Ethereum for bringing on new developers. And so July of 2024, more new developers joined Solana than they did Ethereum. And so Solana became the most popular ecosystem in 2024.
Wait, but for new developers, right? And
for new developers, yes.
So I understand that's for percentage, but is it also for absolute numbers?
Yes. For absolute
okay.
numbers.
Oh, interesting.
Yeah. Super fascinating. Ethereum still has by far the biggest number of developers. But yeah, for new developers, Solana saw more new developers this year. And, maybe another part of it is just how diverse use cases are getting. We're seeing this rise in kind of what I think of as low fee use cases across crypto. So that would be stablecoin transfers, that would be DEX transfers, that would be NFT mints, NFT transactions. Across all of these metrics, there's this kind of unprecedented all-time high activity. And it's happening on these low fee chains like Solana and Base. And so that's been very, very fascinating to see as well. And so, I think on the other side of that is just appreciating how big the Ethereum ecosystem is. Through the report, we looked at multi-chain developers and saw that 1 in 3 developers are now working on multiple chains. Over 70% of those developers are working in the EVM ecosystem, which Ethereum definitely dominates. And a lot of the ways that Ethereum is staying very competitive right now is through its L2s. So through capturing low fee use cases through L2s like Base, but then also continuing to dominate on high value use cases like having TVL, like having restaking take off on Ethereum this year through EigenLayer, and seeing innovation that way. And so, I think part of this year is really just seeing this diversity in use cases. There are high value use cases, there are low fee use cases, and it seems like there are very dominant chains emerging for all of these use cases.
Yeah, I have to say one other thing that just was notable to me. I don't know if surprising is even the right word, was that when you look at the numbers for 2022 versus where we are now, we're still like at half for a number of these metrics. And so it just made me realize that even as much as this year was a bull market year, in a way, I think some of that activity was actually sort of like pent up activity from basically the US government like artificially depressing crypto activity, like with the launch finally of the ETFs and things like that. Like I feel like, in any other year, some of what we're seeing, if there had been more reasonable regulation, then some of that activity would have happened prior. And then this bull market might have started more like after the halving, which is like more typically what we see, but obviously didn't this time. So one thing that I just have to ask about is, you talk about the geographic kind of like dispersion that we're seeing. And, as I mentioned, the US, like basically for a long time was pretty hostile in terms of regulatory pressure in the US on crypto projects. And this year, there was a total sea change, just, the ETFs, like I mentioned. Then, as we all know, crypto ended up being a major factor in the election in multiple ways, maybe not in a way that the average voter understood it. But, we who were paying attention to these things saw, obviously, Donald Trump declared himself a crypto candidate. We saw that once that happened, and then Democrats started crossing party lines to vote for crypto bills. And then Trump made all these promises to the crypto community, and finally, like fair shake, and the industry generally started just pouring a ton of money into all these different campaigns that propelled this red wave in Congress. And so I wondered, do you feel, and I understand the election only happened like roughly a month ago, but just based on all your years of doing this, reporting, do you think that this change in the regulatory atmosphere in the US will result in a change in that geographic movement out of the US for 2025?
I think part of it is that crypto is just much bigger. And so as crypto grows, it's going to be inevitable that a lot of that developer share is going to leave the US. Again, in 2015, Europe and the US together had over 80% of the share of crypto developers. But so that was in 2015, but that was also the year we only had about 1,000 monthly active developers, And so given that we've expanded so much, I think it's inevitable that a lot of that expansion is going to be global. And I think that's going to be really healthy to see that kind of decentralized geographic diversity kind of continuing to enter crypto. That being said, I've spoken to so many founders and people in the space who have actively moved their engineering teams outside of the US, have moved their, have maybe physically themselves moved outside the US because of the regulatory environment here, which, to your point, is shifting. And so I do think a lot of that is going to be stemmed. I'm not sure if it means that necessarily the US is going to gain back developer share, but I do think, this kind of continuous decline of US developer share may flatten out a little bit. And that is something that we might be able to see in the future.
Yeah, honestly, one other thing that I realized is if you sort of account for just the literal, geographic dispersion of the population around the globe, then it kind of does make sense that Asia would eventually rise to the top just because it's the most populated region. And I did look it up. Europe is also more populated than North America. So yeah, as an American, I was actually annoyed to see all that. But then I realized okay, maybe maybe we're still punching above our weight. Anyway, so in a moment, we're going to dive into just all the different activity in all these different ecosystems. But first, a quick word from the sponsors who make this show possible. Polkadot is the original and largest Layer 0 blockchain with over 2,000 plus developers. The anticipated Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, upgrading the infrastructure with 8 times higher transaction throughput and twice as fast block times, tailored core time for the needs of every protocol, trustless bridges to multiple chains, and revised tokenomics with a token burn to reduce inflation. Perfect for GameFi and DeFi to build, grow, and scale. Get your Web3 ideas to market fast. Think big, build bigger with Polkadot. Join the community at polkadot.network/ecosystem/community. On YouTube, on the recent episode of Bits and Bips, Adam72 commented, "Now that Gary isn't protecting ETH, we could admit it's too expensive and move on to something bigger and better instead of 10 more years of upgrades to just make it useful." Which all I have to say is that comment is a really great segue to the next part of this interview, which leads me to, say that I'm back to talking with Maria. So one other, big trend for 2024 was what you mentioned earlier, that this Solana ETH rivalry actually resulted in Solana outperforming Ethereum in multiple ways. And I wondered just generally, what you thought accounted for that and whether or not you thought that would continue. And frankly, even just how people look at Solana and Base and try to compare them, how you're thinking about the different ways that they're attracting developers.
So again, just to kind of recap what happened this year, right? Solana had the most new developers, which is something that's never, since 2016, has never happened before. For Ethereum to be number 2 in new developers, that's very, very new. And Solana and Base did capture a lot of these low-fee use cases I was talking about. So, Base owns 97% of NFT minting volume. Solana owns 64% of NFT mint transactions. 81% of DEX trading happens on Solana. Solana has the most unique wallets. Base is number 2 in trading wallets. So a lot of these signals from low-fee use cases really kind of point to the fact that people are not using Ethereum mainnet, right? They're looking to other chains to do that. That being said, I actually think what's really fascinating to see play out is how Ethereum holds on to its dominance. And it's really through, the first one is network effects, and the second one is through the power of its security, right? The power of the fact that you can do high value transactions on that. And so when you look at these really fast, really cheap transactions, Ethereum mainnet is getting pushed out. People aren't doing these types of transactions on Ethereum mainnet. But if you flip over and look at high value transactions, you'll see that Ethereum mainnet's TVL is 7x larger than the next largest. And you'll also see that um, that there's actually quite a lot of innovation still happening on Ethereum. So I think I mentioned EigenLayer earlier, but EigenLayer being a part of the Ethereum ecosystem, launching restaking as a sector, added $30 billion of TVL to Ethereum, which then also attracted a lot of developers to build AVSs for the EigenLayer ecosystem. And so now EigenLayer is growing in developers. And so Ethereum is still, innovative use cases are still happening on Ethereum. High value use cases are still happening on Ethereum. If you look at stablecoin transfers, high value transfers are happening on Ethereum. If you look at NFT trades, not NFT mints, but NFT trades, then Ethereum is still the largest chain to host most NFT trades there. So I think what we're seeing is just different chains for different use cases. And where Ethereum's kind of scaling strategy has been really interesting is that Ethereum doesn't lose out, or Ethereum as an ecosystem doesn't lose out just because mainnet has higher fees. It actually is able to stay competitive through its L2s. So, altogether, I think Ethereum mainnet and all the L2s account for 65% of new code innovation in the EVM ecosystem. If you add up Ethereum and its L2's DEX volume, it's actually 2x larger than Solana's. And so I think Ethereum has these really crazy ecosystem, really crazy network effects that is probably not going anywhere, and has just a lot of healthy signals around it.
Okay. Yeah, I also had the same feeling just from reading the report, where it really felt like they were just differentiated. People
Yeah,
seem to be
exactly.
gravitating toward them for different reasons, which is just fascinating because, of course, the general discourse is like, oh, they're competitors and whatever, and obviously they are in certain ways, but yeah, it does feel like, for instance, like meme coin activity is really popular on Solana. And, Base is like sort of where the Ethereum ecosystem is catching up in that regard. So I also wanted to, of course, talk about Bitcoin. In a way, Bitcoin was notable just because it wasn't changing, really. So yeah, what were you seeing there?
Yeah, I mean, Bitcoin is incredibly consistent, which I think is exactly the type of adjective you want to assign to Bitcoin. If you look at Bitcoin's growth over time, I'm just flipping over to the slides now to get an exact number for you. But Bitcoin is still growing, right? So in 2018, Bitcoin was somewhere around 400 monthly active developers, and now they're at 1,200. So they've 3x'd since 2018. And so that's still very, very impressive. And I think what's also really fascinating with the Bitcoin developer chart is that it's just a slow and steady kind of march up. It doesn't really get affected by market cycles. It doesn't really get affected by prices. There is this kind of strong consistency in the Bitcoin ecosystem. This year, Bitcoin stayed relatively flat. It lost 62 developers, which kind of falls within this sort of like noise that you would see typically in a year. And so, I think effectively the developer activity was flat over 2024. Again, I think a positive signal for Bitcoin. Another thing that we track is the number of established developers, which is developers who have been in crypto for over 2 years. In this case, established developers in Bitcoin, right? So they've been in Bitcoin for over 2 years. And that number is also steadily growing. And so if you look at anyone who's left Bitcoin, they've been newcomers, and so, or emerging developers, meaning that they joined crypto after 2021. And anyone who joined crypto before 2021 still seems to be marching on, writing a lot of code. And by the way, the reason why we care about these established developers is they write 70% of code commits in crypto. And so they, there's kind of different roles that different developers play. Hackathon developers play a role. People who maintain code bases play a role. Protocol developers play a role. Older developers play a role. But it's really cool to see that Bitcoin has continued growth in sort of these older developers, continuing to stay very, very active. And so as of the report end, which is November 1st, Bitcoin has 672 established developers, which is, again, the line just goes straight up, right? So it's an all-time high for Bitcoin. It's the highest it's ever been. And so Bitcoin looks very healthy. What is interesting about Bitcoin that's slightly different is you also see this growth of developers working on Bitcoin scaling solutions. So again, that's not to say that, Bitcoin is really just staying the same forever. 42% of monthly active developers in Bitcoin right now are working on different scaling solutions for Bitcoin. So I think that's very interesting to see the types of new innovation that's still coming around the Bitcoin ecosystem.
Yeah. It was very much a clear trend, just, in terms of, even if I think about the different projects that we featured on the show, there were a number of layer 2 Bitcoin projects, and we didn't even get to all of them. So that's a very active area of development in Bitcoin. I did also then just want to ask you about this whole slew of kind of newer and smaller chains that, aren't far behind, like Ethereum, Solana. Some of the ones that you called out in the report were like ICP, Aptos, Base, Sui, then there were even smaller ones. But just where are you seeing, kind of the state of play amongst that sort of lower tier or smaller tier?
Yeah, so I think that's, so we have these lists that detail the top 10 fastest growing ecosystems over the past year. And we look at two different types of we define fast growing in two different ways. We define it in terms of total developers. So where were you in Q3 of 2023 and where were you in Q3 of 2024? That's one comparison. And then the other comparison we have is where are you in full-time developers? Full-time developers being developers in your ecosystem who commit code 10 plus days in a month in a rolling 28-day period. And so EigenLayer is the number one fastest growing ecosystem by both overall developers and full-time developers. That consistency is really cool to see. Again, kind of harkens back to the growth of AVSs that happened over the past year. And so you can definitely see that reflected in these developer numbers. The rise of the Move ecosystem, Aptos had a lot of overall developers, and so a lot of hackathon participants, a lot of new developer interest. And Sui also had 24% of overall developer growth. Aztec had 36% overall developer growth and 47% full-time developer growth. So that's super healthy. Celestia, Polygon, ZK, EVM, Tons, Stacks. I think a lot of these ecosystems are seeing very healthy growth in 2024 as well, which is very interesting to see.
So some of the tech trends that you called out were zero knowledge. And that was really, so that was the first one that you called out. And it really looks like that activity is just increasing a lot. You mentioned that it had 16x from 2020 to 2024. Can you talk a little bit about what you're noticing there?
Yeah, definitely. So ZK is a sector that's coming out of research, and you can see that in both the developer numbers and the usage numbers. At this point in time, we're looking at 2,054 monthly active developers in ZK ecosystems. So very healthy, very, very sizable at this point, with 823 monthly active full-time developers working in the ecosystem, and about 200 monthly active developers who are new, 200 developers per month who are new coming into the ecosystem to do something in the ZK ecosystem. So all of that looks really, really healthy. The growth, you see a lot of that happening on chain when you look at ZK contract deployments. And these numbers are going to be pretty small, right? So I guess this points to how early this sector is. But in 2020, there were 40 contract deployments using ZK precompiles. And in 2024, we're looking at 639. So that's a huge increase. By absolute numbers, still quite small, but I think it means that more and more people are continuing to tinker in this ecosystem. And so we're definitely seeing a lot of early growth there. Another thing that we did this year that's pretty fascinating is we looked at a lot of activity by time zones. So when did this activity happen? And we try to map where you might be in the world. And what's really interesting with the ZK is how consistent it is. If you look at both ZK rollup users and ZK rollup contract deployers, their time zones tend to line up with Europe and early Asia time zones in both cases. It's hard to tell the exact location of participants just based on time zones of activities, but it definitely does seem like, ZK rollup activity in general tends to peak during daytime hours in the Eastern Hemisphere. And that's very consistent for both users and deployers who are more likely to be developers.
Yeah. And one thing actually that I wondered was for the ZK activity, it seemed like most of what you were talking about was rollups, but was some percentage of that also privacy type solutions?
Yeah, it's a combination of ZK rollups, as well as different languages that are coming out and different libraries that are being used in different languages as well.
Okay. And any hypothesis as to why Asia is using it more than the West?
No, other than the fact that the difference is pretty stark. And so, I think it definitely tends to be more skewed towards Asia in a way that's, you can't dismiss it. It feels like a clear trend. But yeah, no clear theories as to why that might be. I mean, certainly it could be that just privacy tech in general is more welcome in certain regions of the world. And so that could certainly be part of it as well.
Yeah. Yeah. I honestly was like, well, there's that whole section of the internet that's like cut off from the rest of us. And maybe they want to hide the fact that they're accessing our part of the internet. But anyway, one other thing that you talked about was NFTs. And I have to admit, I was really shocked to see those stats because I think the perception has been that the market for that has been pretty soft this year up until just like in the last few months. So yeah, I frankly was just really shocked because it looked like all the absolute numbers are quite a bit higher even than in like 2021. So what were you seeing there?
Yeah, so it really is like what sector of this are you looking at? And what's going to be surprising to a lot of people is that deployments has increased by quite a lot. And we're kind of hitting all-time highs in deployments. One thing to note, though, is we count a NFT deployment as a first mint into a collection. And that allows us to count across kind of Bitcoin, Solana, and EVM chains as well. So we're using this as a proxy. But effectively, we're seeing a lot of creator activity in NFTs, more so than we've even seen during the NFT frenzy back in 2021 and 2022. And so creator activity is higher than ever. And again, what's really fascinating here is that minting activity is higher than ever. I'm pulling up the exact number here, but minting volume actually hit an all-time high in 2024. The highest that it reached in January 2021 was 800 million in a month in terms of minting volume. In November 2024, it hit 1.5 billion. And so there's more that's being minted now than there ever was. 97% of that is happening on Base. That's pretty fascinating. Minting wallets as well is increasing, as well as mint transactions. And when you look at, I think that honestly, like just looking at how much minting activity has increased um, was really fascinating and kind of prompted us to dig a little bit more into what were people minting, what are actually the collections by top minting volume and transaction volume and by minter count. Um, and it turns out that this kind of perception that we have around NFTs, right, that it's art and that it's collectibles, um, you're really seeing that diversify quite a bit in 2024. Some of the top assets are collectibles or game assets, but a lot of them are reward systems, right? Or they could be NFTs used in DeFi activity, or they could be just kind of like a badge or some sort of identity credential that's given out. And so you're really seeing this huge diversification of what it even means to be an NFT. And that's been driving a lot of healthy activities for NFTs in general. And I think for me, this points to the fact that possibly NFTs is moving in the direction where, in the same way we don't really talk about, how our ERC20 is doing. I think very soon we're probably not going to be talking about how NFTs are doing either, just because the types of things that they can be is just getting so expansive now.
Yeah, honestly, like looking at those numbers and then thinking about how the market had seemed dead for most of the year, I realized like, oh, this is what adoption looks like. It's like there's no
Yeah,
mania, but the metrics show like there's actual
right.
real
There's activity.
activity.
Yeah.
Yeah, it's like the creators are there, but the traders aren't there, which is like a much better dynamic, I think, for like long-term growth and sustainability.
Yeah, well, there actually is still quite. I mean, it's not what it was in 2021 or 2022, but there's pretty consistent trading activity as well. And I do think NFT trading, if you think of NFTs as just on-chain assets, the trading of on-chain assets is going to continue. And so we're still seeing at least 300,000 wallets a month trade across the major NFT marketplaces. And so I think the two things we're kind of seeing now is trading staying as just a useful primitive that probably will always exist for NFTs. And there's a lot of healthy activity continuing there. But to your point, kind of like we're not seeing those kind of mania highs at this point in time in NFT trading activity. And then also just a clear user shift into other things that you can do with NFTs. And they're minting NFTs for a plethora of different reasons that often has nothing to do with collecting something or getting, supporting a creator in some way.
Stablecoins were also a big highlight for this year. Almost $200 billion worth of stablecoins in circulation, $81 billion of volume in a day. Tell us about all the trends there, because there's quite a lot of different things to point out there.
So for stablecoins, stablecoins in circulation is at an all-time high. Most of that is Tether. Tether is the most issued stablecoin, and USDC is second. Kind of back to our earlier discussion about Ethereum. Ethereum is the number one ecosystem for stablecoins. 59% of stablecoins are issued on Ethereum, and Tron is the second one. 35% of stablecoins are issued on Tron. One thing we did this year was break down transaction sizes for stablecoin transactions to look at, to start kind of putting a shape around what are the types of transactions that people do. For most types, so when we break this down by stablecoin token, right? So there's BUSD, there's DAI, there's USDC. So for most of these tokens, the median is under $100. It's pretty fascinating. It kind of points to a potentially a payments use case that seems pretty solidified in stablecoin usage. And there's also some really interesting differences in how different tokens behave. BUSD and Celo USD tend to skew towards smaller transactions, and some of the more DeFi associated stablecoins tend to skew towards higher transactions, so higher transaction values. And so again, you're starting to see this diversification, right? Where like stablecoins is one term, but the way that people are using it, whether it's for transfers and payments or for, on-chain financial activity, you're starting to see some differences here as well. And the last thing around stablecoins is we also broke down the time zones for when people do stablecoin transactions. And I think, unsurprisingly, stablecoin transactions happen at all hours of the day. And so that does seem to suggest that there is global usage. But there's also a very noticeable peak, again, around Asia and Europe time zones for transactions. There's a peak of 2 to 3% more transactions happening during Asian, European, and African working hours. And then for transaction volume, that tends to peak during European and skews a little bit more Western. And so that's really interesting as well. So you're seeing more people transacting, maybe smaller amounts, on the easternmost portion of the world, but perhaps on the Western portion, there are fewer transactions, but the volume is higher.
Yeah, looking at that, I also was thinking about I don't remember when this happened, maybe like 20 years ago, where, we were saying, oh, like in Africa, they're sort of leapfrogging where they're not even doing landlines. They're literally just going to mobile phones. And it sort of feels like, in the US, we have, tons of different financial services that we can do for like small transactions or whatever. But, in other places where maybe they don't have such good built out services, like this is a really amazing technology for them, which is why there's some of that difference. Well, Maria, it has been such a pleasure talking to you. Thank you so much for coming on Unchained.
Thank you. Really appreciate it.
Don't forget, next up is the weekly news recap, today presented by Wondercraft AI. Stick around for This Week in Crypto after this short break.
Welcome to this week's Crypto Roundup. In today's recap, we'll cover Microsoft shareholders rejecting a bold Bitcoin treasury proposal, Google's quantum computing breakthrough stirring debate over Bitcoin's security, and Magic Eden's ME token launch making waves despite technical challenges. We'll also dive into Senator Elizabeth Warren's influence over SEC appointments, Binance and Circle teaming up to push USDC adoption, Ripple's RLUSD stablecoin getting a green light in New York, Athena's USDE becoming the third largest stablecoin, and Coinbase addressing criticisms over account restrictions. Thanks for tuning in to the weekly news recap. Let's begin. Crypto advocate French Hill to lead House Financial Services Committee. Arkansas Republican Representative French Hill has been appointed chair of the influential House Financial Services Committee, starting in the next congressional session on January 3rd. Hill, known for his deep understanding of cryptocurrency and blockchain, has been a key figure in shaping crypto policy as chair of the Subcommittee on Digital Assets, Financial Technology, and Inclusion. Hill has promised to prioritize passing legislation on crypto market structure and stablecoins, aiming to clarify whether cryptocurrencies are classified as securities or commodities, and to establish robust collateral requirements for stablecoin issuers. His leadership is expected to strengthen bipartisan efforts on crypto legislation, a stance reinforced by his history of bridging divides within Congress. With the committee overseeing the SEC and CFTC, Hill's appointment signals a proactive approach to crypto regulation. Microsoft shareholders reject Bitcoin investment proposal. Microsoft shareholders have rejected a proposal to allocate company funds to Bitcoin, following recommendations from the company's leadership, with less than 1% of them voting in favor. The initiative, introduced by conservative think tank the National Center for Public Policy Research, suggested using Bitcoin as a hedge against inflation, citing its limited supply and historical performance. Microsoft's chief financial officer Amy Hood emphasized the firm's commitment to preserving capital and liquidity to support operations, stating that the company has evaluated cryptocurrencies and continues to monitor the space. MicroStrategy's executive chairman, Michael Saylor, who has championed Bitcoin investments, argued during the meeting that adopting Bitcoin could yield substantial financial gains for Microsoft. Despite his advocacy and the cryptocurrency's remarkable performance this year, the proposal failed to gain shareholder support. Texas proposes Bitcoin strategic reserve in new legislation. Texas State Representative Giovanni Capriglione has introduced a bill to establish a Bitcoin strategic reserve for the state. The legislation aims to position Texas as a leader in digital asset innovation while enhancing financial security for its residents. If passed, the bill would enable Texas to acquire and hold Bitcoin in reserve for a minimum of 5 years, with provisions allowing citizens to contribute donations to the fund. The reserve would serve as a long-term hedge and bolster Texas's standing in the crypto economy. The initiative mirrors similar efforts being discussed at the national level, signaling growing interest in integrating Bitcoin into government-level financial strategies. Google's Willow quantum chip sparks controversy. Google's new quantum computing chip, Willow, has ignited debate across the crypto community, raising concerns about the security of older Bitcoin wallets and the broader implications for blockchain encryption. The chip boasts a 105-qubit capability, which means it can complete tasks in minutes, which would otherwise take millennia, highlighting the vulnerability of outdated wallet formats such as Bitcoin's pay-to-public key, P2PK system. These older wallets, which include the 1.1 million Bitcoins held by Satoshi Nakamoto, could now be at risk of being breached by quantum algorithms. Avalanche founder Emin Gün Sirer proposed freezing Satoshi's coins to mitigate the threat, suggesting a sunset date for P2PK unspent transaction outputs. As quantum computing gets threatening, the Bitcoin community might want to look into freezing these coins, Sirer said on X. While some developers advocate upgrading blockchains to quantum-resistant cryptography, the idea of freezing coins has proven divisive. Critics argue such actions could undermine decentralization, while others see it as necessary to maintain Bitcoin's integrity as quantum computing advances. Magic Eden's ME token launch highlights airdrop frenzy. Magic Eden, the leading Solana-based NFT marketplace, launched its ecosystem token, ME, on Tuesday amid significant anticipation, but it wasn't without challenges. Early trading saw ME's fully diluted valuation soar to $15 billion before stabilizing at approximately $4.5 billion. The token airdrop was marred by technical issues, with users reporting problems with accessing the claim process via the Magic Eden wallet app. Errors like something went wrong and confusing prompts frustrated participants, some missing the opportunity to capitalize on early price spikes. Despite these hurdles, over 70,000 users claimed nearly 69 million ME tokens in the first hour, according to Magic Eden. The chaotic rollout highlighted the challenges of large-scale airdrops, but also underscored the growing popularity of such initiatives. Other projects such as Fuel and Movement Network are also leveraging airdrops to engage users. Fuel, an Ethereum rollup, introduced its native Fuel token this week, while Movement Network also launched its mainnet beta and token, utilizing the Move programming language for secure and efficient transactions. Elizabeth Warren to influence SEC Commissioner selection. Massachusetts Senator Elizabeth Warren, known for her critical stance on cryptocurrency, is poised to have significant influence in selecting the next Democratic SEC commissioner. According to party insiders, Senate Minority Leader Chuck Schumer has given Warren a pivotal role in recommending candidates to replace outgoing commissioners Gary Gensler and Jamie Lizarraga. The SEC can only have 3 commissioners from the same political party. With one Democratic spot still open, Warren's input could shape the future of the agency's approach to crypto regulation. Schumer's decision also reflects a political test for Warren. Sources told Unchained that Schumer, who is a moderate, is challenging her to nominate a candidate who can secure confirmation in a Republican-majority Senate. If Warren's choice fails, it could bolster Schumer's case for a more centrist approach. Binance and Circle forge alliance to drive USDC adoption. Binance, the world's largest cryptocurrency exchange, and Circle, the issuer of the stablecoin USDC, announced a partnership aimed at expanding USDC's global reach. Revealed at Abu Dhabi Finance Week, the collaboration seeks to enhance USDC's role across Binance's ecosystem, including trading, payments, savings, and corporate treasury operations. This represents a major shift in the emerging crypto market structure, said Circle CEO Jeremy Allaire on X. Binance plans to integrate USDC more extensively into its services, providing its 240 million users with greater access to the stablecoin. Additionally, Binance will adopt USDC as its primary treasury stablecoin. The development also positions Binance and Circle to navigate the European Union's upcoming MiCA regulatory framework, which may limit the use of less transparent stablecoins such as Tether's USDT. Also this week, Circle announced the upcoming launch of the second version of its cross-chain transfer protocol in early 2025 to enable faster USDC transfers with low-latency settlements across Ethereum, Base, and Avalanche, with plans for broader blockchain integration. Ripple's RLUSD stablecoin secures New York approval. Ripple's RLUSD stablecoin has received final regulatory approval from the New York State Department of Financial Services, paving the way for its official launch. Ripple's CEO Brad Garlinghouse announced the milestone on social media, stating that exchange and partner listings for RLUSD will be activated soon. The stablecoin, first unveiled in April, operates on both the XRP Ledger and Ethereum networks. Testing began in August, with Ripple forming partnerships to ensure liquidity and adoption. Notable collaborators include exchanges Uphold, Bitstamp, and Bitso, as well as market makers B2C2 and Keyrock. Athena's USD becomes third largest stablecoin. Athena Labs' synthetic stablecoin USDE has surged to become the third largest stablecoin with a market capitalization of $5.65 billion, overtaking Maker's DAI, now known as USDS, at $5.2 billion. The leap follows the addition of its staked version, SUSDE, as a collateral asset on Aave in November, driving significant adoption and liquidity. Aave's integration enabled users to leverage the Aave Athena strategy, which involves depositing SUSDE as collateral, then borrowing Tether's USDT or Circle's USDC, and recycling funds into more SUSDE. This strategy boosted Aave's stablecoin borrowing rates to over 20%, said Athena's head of growth Seraphim on X. USDE's unique model collateralizes with assets such as Bitcoin and Ether, hedging them through short positions to generate a yield currently at 27%. This yield-centric approach has drawn investors seeking passive income, propelling USDE's rapid rise in the DeFi ecosystem. Coinbase responds to criticism over account restrictions. Coinbase has addressed user frustrations regarding account restrictions, attributing the issue to a surge in fraudulent activity following the U.S. presidential election. In a statement posted on X, the exchange explained that its fraud prevention systems were working as intended amid a significant increase in new and returning users. Coinbase noted a 2 to 3x increase in fraudulent attempts, which led to more restricted accounts and longer customer service wait times. The exchange dismissed claims of widespread restrictions as misinformation, but acknowledged user concerns, stating that it is working to resolve issues quickly. Some users still criticized Coinbase's response, sharing experiences of prolonged restrictions and inadequate support. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com, that is unchainedcrypto.substack.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Juan Aranovich and edited by Nelson Wang. Thanks for listening!